Alright everyone, here we are with another video with Invest for tomorrow. And to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watched this video, and if you found it helpful and informative, to not forget to click on that subscribe button and click on the bell to not miss a single video that I post. Now, if you guys want to know what stocks I'm watching weekly, you can check out the links down below to my Patreon. There's my weekly watch list. And you will gain access to the Discord by joining the Patreon. Slots are filling up pretty quickly. And over at the Discord, I talk about stocks that I'm watching daily. And all I'm looking for is 5 to 10% on a good day. And on a great day, 10 to 20%. And when we break out of that 20% opportunity in one single day, I call those home runs. And those tend to happen as well. So if that's something that interests you and you want to learn and grow and have enlightenment on what stocks to look for as opportunities to maximize profits and minimize losses, you can join us. But this short clip here, I found it, and I want to point out some key things here and commentate over it, but let's watch it.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
NASDAQ, everything and more.
The guy said the bell's about to ring in 5 seconds, and to be honest with you, we wish we wouldn't. Well, so far in just the first few seconds of this clip, you could see that everything is red, right? All the stocks are red all around the world. I mean, those were different exchanges. It wasn't just the US. And when you look at it, you know, you will see red everywhere. And we saw that in 2020. This is the 2008 market crash when it was actually happening and going on, you know, from September to October in that area towards the end of the year. Now, there's speculation that this year, after September, towards the end of the year, we're going to pick up, okay? And that we might go through some pressure right now, like the next 3 months to 6 months out from where we're going into, which we're going into May. And then May might be a little rocky. June, July, we might feel it because inflation's going to go up. And if inflation kind of cools itself down on its own without the Federal Reserve having to come in and do anything about it, which is what their goal is, then, you know, inflation is just going to dissipate. And around August, September, we're going to have some turbulence of picking up slightly, trying to figure out where it wants to go. And then the end of the year, we are going to skyrocket going into 2022. That's one scenario. The other scenario is that we're going to be a little rocky the next several months. And towards September, since there may not be another stimulus, because that's when stimulus actually ends, the one that just got passed about a month ago or two. Yeah, that ends in September. And once that ends in September, if there is no more stimulus or anything like that, there's going to be a lot of other economical issues beyond inflation, beyond the stock market, beyond everything. Because that stimulus doesn't just give the stimulus checks to the individual people in the public, right? It also has different things with, you know, renters and you know, homeowners and all these different like stimulus, right? That's what it's called, stimulus aggregations within that bill that doesn't just send out a check to people, but if not, protects people from different things that are beyond just a $1,400 or $2,000 or $600 or $1,200 check. And that's something I do want every single investor and viewer to be aware of, that if we don't have another stimulus, we will see other complications if the economy doesn't start to roll out and jobs don't get filled up. That's why the Federal Reserve is trying their best right now to focus on unemployment more than anything, because if everyone is employed and unemployment is low, no matter what inflation's going on and everything's going to cool off. The stock market's going to keep running once things kind of level off and have a clear direction, and everyone working is going to stop vacancies from homes and foreclosures and all these other issues that might happen. Okay, that's speculation, but let's keep watching.
Or has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
We're now down 43%.
What in the world is happening on Wall Street?
Two-year note yields went from 190 to 166 in the blink of an eye.
The stock market is now down 21%.
Down over 16%. Dow at the same time has fallen about 18%.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it. It's so horrible.
We've had an 8-day losing streak in the Dow that in percent.
So as we continue to see, there was a lot of noise and rumbling when people were worried and focusing on the Dow and stuff. And as you can see those numbers, oh my gosh, where the Dow is today and where the S&P is today, I mean, it's way beyond those numbers. And that goes to show you too that in the moments of fear and all these different, corrections and crashes, when you look towards the long term, there's opportunity because the Dow was really low compared to where it's at now. Just look at the Dow today and look at that on the screen and you will see, right? Another thing too that was interesting is the fact here of what he's pointing out. Like you could see eBay here. I mean, look at that price. Look at Apple. And Apple actually went up to the 400s, almost 500s, and then did a split, and it's a little bit above this. So this is actually, if you really think about it, times 5 that, right? Or times almost 6 that. But these stocks were all falling and stuff. So one of the biggest things to pay close attention to is how, Apple and tech stocks are performing. Because you can see eBay here, you can see Cisco here, you can see many different stocks. You want to know, and then even Intel's down here, you want to know how they're doing so that you can get a sense of how everything else is going to play out, because tech and growth get hit hard, right? We already went through that. We just went through that in the correction, and some of those stocks have actually been sitting in the same place, and that's something that's important to be aware of. They say that it starts there, then it goes into value stocks, which value stocks right now are running, and cyclical stocks, and then they all get hit. And that's the part that we're about to transition into if we're actually going into a correction or another crash. But these crashes are consecutive, right? They're consecutively falling. You can hear for 8 days straight. We went through that in 2020 in the March, February to March crash. This was just a correction. Now the question is, will we go into another correction or a crash? And that's like the question of the year right now, the question of the next 5 years, the question of the decade moving forward, because everybody wants to be prepared, right? And wants to understand, but you want to be aware of some certain cues here that I've learned watching back to clips like this one, and that's why I'm commenting over it, because I found this clip very interesting, is there were certain things that happened in 2020 that correlate to 2008, and it's the fact that there was consecutive days of red and big days. So that is something to be aware of.
And further increase the risk to growth.
Can't look at it after you buy it. It's so horrible.
We've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
This market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices so fast, so fast.
Seconds to go until the start of trading at the New York Stock Exchange, and stocks are set to kick off
lower, a whole lot lower.
eBay is down 6.5%, and really you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
So that end right there of that gentleman talking, as you could see everything else that was stated, he stated that there could be a change, and it's going to change for, permanently and dramatically. And we went through something like that in 2020. So it's interesting to me that no matter what crash happens or what correction happens, there's a change that comes with it moving forward. And they always say that the market's changed and that everything's changed. So I want you guys to be aware that as an investor, you want to be able to be prepared, right, to handle change. Okay, guys? And when we actually go back, right, all the way back to those times, right, all the way back to 2008. Let's actually see this here. You could see that it all had started close to October, like September, it was bringing itself up close to October, and it lasted from October to February of 2009. This was intense. Okay, guys? Intense. Now, the way it happened last year in 2020, it was from February to April. Okay, this lasted just a few months. So a lot of people are anticipating that for the next 3 to 6 months, we are going to be in a correction kind of, style. But towards the end of the year, we may see either a crash or recovery from this correction. So I do want every single investor and viewer to be aware of these certain indications. We got to look at tech stocks, how they're doing. Are they getting hit hard? Growth stocks. Then see how the value plays are doing, because that's those stocks that are actually pushing the S&P up right now. How are they doing? Will they hold themselves up through the reopening? Will they actually grow? And then we got to look at cyclical stocks. And then we have to see for consecutive days down. Because just like the stock market goes down consecutively, well, the stock market has been going up consecutively. Look at this. From March 26th till the 16th of April, a whole month, literally almost, of consecutive days upwards. And when it's going down, it does the same thing consecutively. Look at this. It was a whole entire 2 months of consecutive moves. And same thing here, but this one was back and forth, back and forth. So this looked like a correction more than a crash. A crash would be just like these green bars nonstop, red bars nonstop on the downtrend. And there was one moment that there was a commentator there that stated for 8 days now. So I would look for that Q2, 5 to 8 days. And if it passes 8 days, yeah, we're in the middle of a big correction or a crash. So I just wanted you guys to be aware of that, because sometimes we forget about these things and we overlook it. And these are the most important things to be aware of. Prepared for all turbulence that may come either this year, next year, or in the next 5 to 10 years. Because as you can see, crashes take a while to actually happen. 2020, and then we had the one back in 2008, and then before 2008, we had the one back here that was in 2000 all the way down to 2002. Okay, guys, so that was probably one of the longest downward trends. But after 2002, it started to bring itself back up. So there are some things that right now have a lot of investors concerned, but the stock markets are way different than what they were 20 years ago, 30 years ago. I mean, there's so much accessibility and so much money coming in through all these apps, and anyone can just trade fractional shares and stuff like that, that I don't think we'll be going in a downward trend for a long time like that .com bubble. But we could go into a downward trend for 3 to 6 months if it was to happen. As always, guys, thank you guys so much for watching, and let's make some money.